Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. Shares of Strathcona Resources are falling. Actually, they've bounced back a little bit. They're up slightly right now. All this is because of the energy company being one of the worst performers on the TSX, so it's a bit of a bounce right now. The Calgary-based company completed its previously announced special distribution of $10 per share. The firm also disposed of its marketable securities portfolio. According to data compiled by Bloomberg, Strathcona owned 14.2% of MEG Energy and competed with Cenovus Energy to buy the oil sands producer outright. Holiday retail spending in Canada rose 4.4% annually, according to Visa's Retail Spend Monitor. In-store shopping dominated with 88% of the total sales, and online sales rose to 12%. Clothing and accessories sales grew 10%, leading all retail segments. Visa says AI is beginning to shape how consumers discover products and compare prices. The monitor analyzed retail sales activity between November 1st and December 21st. The Canada Pension Plan Investment Board and Goodman Group have agreed to set up a multi-billion-dollar European data center business. The Australian Industrial Property Investment Manager and the Canada Pension Fund Manager will initially invest close to 4 billion Australian dollars to develop data center projects in Frankfurt, Amsterdam, and Paris. Construction is due to start by the end of June. And looking at the markets, you can see the TSX again holding over 32,000, had dipped below it briefly after closing yesterday above 32, but right now it is on the green side and south of the border. It's a tentative market down there, but right now everything has bounced back, and you can see actually starting to move up. Looks like the Santa Claus rally is in full effect. S&P 500 up by a quarter, the Dow up by 0.19, and the NASDAQ up by a quarter as well, roughly. Well, the price of copper has hit a fresh high this morning on the London Metal Exchange. For more, we're joined by BNN Bloomberg's Lindsay Biscay. Lindsay, thanks as always for joining us. Yeah, it hit the magic number today, didn't it?
Hit the magic number, $12,000 a ton on the London Metal Exchange. This is the biggest annual gain since 2009. So we're seeing the price of gold, silver going up, and now we're seeing copper skyrocket as well. There's a couple of different reasons for this, but a lot of it hinges on supply and demand. We're seeing that building out of AI centers, the need for clean electricity supply, copper used for both of those things a lot. And so demand has skyrocketed over the last couple of years. But the problem is there actually isn't enough copper to go around. And there's been, severe mine outages from several mines for several reasons. And we're seeing that play into the supply demand issue. There was flooding at a mine in the Democratic Republic of Congo, a deadly tunnel collapse at a mine in Chile, and a deadly mudslide at a copper mine in Indonesia. And so these disruptions are really accounting for a loss when it comes to copper. 3% of lost output in 2025. That's 650,000 tons of copper that we did not see in 2025 that we maybe could have had there not been environmental factors at play. And most likely we're going to see that reduction of copper output in 2026 as well because of what we're seeing here. It takes a long time for mines to get back up and running. It takes a long time to start new mines, about 5 to 10 years. So it's not a quick process. Yeah, we're seeing that. And then again, we're going to continue to see that into 2026.
And of course, we might as well throw Donald Trump into the mix.
Why not, right?
What the heck?
Yes,
it's Christmas.
It's Christmas. He's usually somewhere in there at play, whether it's just words or actual actions. Right now, it's just words. He did talk about tariffs on refined copper. He mentioned this back in February. So this is something he's kind of put an idea out a while ago, talking about it for 2027, which sounds like it's far away. Obviously, it's about a year away.
Yep.
And so now people are worried about potential tariffs on refined copper. The U.S. is the biggest refiner of copper in the world. So interesting that that's one of the facts at play as well. But obviously, people may be worried about more tariffs on another metal. They're starting to buy it up, and we're seeing that the price of copper rise because of that. We did speak with Gavin Graham today about that and the prospect of tariffs, and here's more on what he had to say.
one of the reasons perhaps for copper's particular strength in the last little while has been worries about maybe there could be some imposition of tariffs on refined copper as opposed to unrefined. We had an early flurry of those worries earlier this year after the Liberation Day announcements. So China's demand is obviously a major driver, but the fact is it's North America and Europe, again, also need lots of copper as well, and there is not enough of it around.
So Graham also saying people could be worried about the U.S. dollar in the future. We're anticipating more interest rate cuts, lower interest rates in the new year in the U.S. at a time when other countries have maybe stopped that, and that would lower the value of the U.S. dollar. And of course, whenever that's in play, whenever there's a lack of confidence in your currency, in the U.S. dollar, people flock to metals. And so that could be part of the reason too. But when it comes to copper in particular, analysts are warning that the global copper market will face its most severe deficit in more than 20 years, with demand expected to exceed supply by about 600,000 tons of copper. So it looks as though we could be seeing this into the new year as well.
These prices are here to stay.
Yeah.
Okay, Lindsay, thank you very much for that. That's BNN Bloomberg's Lindsay Biscay. Up next, Stats Canada releasing the latest GDP numbers for October, and we're showing a contraction. We're breaking down those numbers with our next guest, Sal Guattieri of BMO Capital Market, next. Well, the real GDP in Canada decreased by 0.3% in October, offsetting a 0.2% increase in September. Overall, 11 of 20 industrial sectors contracted in October, and there were also contractions in goods-producing and services-producing industries, and the total investment in building construction went down 0.5% to about $22 billion. Here to talk about the numbers and break them down is Sal Guattieri, Senior Economist and Director for BMO Capital Markets. Sal, thanks very much for joining us.
Welcome.
Initial number, the 0.3, a little more, a little bit of a bigger drop than predicted, but your thoughts on it? Is it still in line?
Well, it matched Stats Canada's initial tally of activity in the month, but overall pretty disappointing. Considering the broad nature of the decline, it was most of the major categories were down: mining, manufacturing, retail, construction, all down in the month. And perhaps more disappointing is the very minimal rebound we saw in November, at least according to the flash estimate. So really does set us up for pretty soft fourth quarter following Q3's rebound, and could be hit or miss as to whether we avoid a second quarterly contraction this year. Remember, in the spring, the economy contracted at the height of the trade war. That was understandable, but a contraction in Q4 would be quite disappointing. We're not there yet. I think there's still a good chance we could avoid a contraction, but let's face it, Canada's economy, at least by this industry measure of GDP, has barely grown in the past year now to October. It doesn't help that manufacturing is down about 3% in the past year. But the other worrisome part is retail sales have now declined in the past 2 months. And remember, consumers were acting as a pretty good sized cushion for the economy in the face of this trade war, but they slowed in the third quarter, and now it seems like that slowing continued in the fourth quarter of this year. So that's a bit worrisome. So unlike the U.S. economy, which, as we saw with the third quarter data this morning, accelerated in that quarter on the back of very strong consumer and business spending, Canada's economy really doesn't have any key drivers moving it forward, and it pretty well has no momentum at the moment. We're hoping that changes in the new year on the back of fiscal stimulus and interest rate cuts. But the big problem here is not only is the economy struggling with some of the sector-specific tariffs, but just the overall trade policy uncertainty that's putting a lid on business investment.
Are we really starting to see some sectors now feeling the effect? It felt like we might have avoided the effects, or at least cushioned the effects of the tariffs, but are we now starting to see it full-blown?
Yeah, it's quite possible that we're just seeing some of the weakness broadening across the economy. that was initially attributed to the dramatic cutbacks in exports in those key sectors, key industries hit hard by the tariffs: steel, aluminum, motor vehicles. But that weakness now might be just spilling over a little bit. And again, quite worrisome that even retail sales, the consumer seems to have softened recently. Now, it doesn't seem to jive with the household employment numbers we've seen in the past 3 months, but those just seem quite out of line with what we're seeing in the economy. Again, very little growth in the past year in industry GDP. And if you look at the establishment survey of employment, payrolls, they're more in line with what the GDP numbers are suggesting. It's a pretty weak economy, pretty weak labor market. And we could be seeing that weakness now spill over to the consumer, and people are just pulling back a little bit.
I was going to say, is this consumers, are they tapped out entirely, or are they just saying, you know what, we need to put some money, we need to slow down and protect ourselves right now?
I think people are being careful, obviously, because the trade war is still very uncertain, especially heading into the renegotiation of the USMCA. We'll see how that goes. But that's a big concern of many businesses and households, workers in particular. There's still that ongoing uncertainty about how AI will play out in the labor markets. Does pose a risk of displacing quite a few jobs in the future. So I think people are worried about that. So it could be that just households are pulling back, perhaps increasing their savings in response to these ongoing concerns. Inflation, it's come down, but it's still running above the 2% target. So affordability is still a bit of an issue in especially for grocery store costs. So I think for all those reasons, we could just be seeing the consumer pull back a bit. Now, thankfully, Bank Canada has cut interest rates pretty aggressively in the past couple of years. It may be on hold going forward. This report might raise some doubts about that, though. But I think that the easier policies, the lower interest rates, will encourage stronger consumer spending in the new year.
What kind of an impact could the CUSMA talks have as we head into the new year? They're supposed to start in January. Will that have an effect, or do you think that'll wait until we finally have a deal one way or the other?
Well, what we're hoping for is that in these talks, we do end up with some reduction of the sector-specific tariffs. So for steel, aluminum, instead of 50%, maybe 25% or something less. That would at least give those industries a bit of a break, at least relative to other countries that are selling those items into the U.S. That might be the best we can hope for. Our general assumption is that we just see the negotiations drag on through next year, maybe on an annual basis. There'll be an annual review because there are some contentious areas that need to be worked out. Unfortunately, even if we see some reduction in the sectoral duties or tariffs, we may not see all the uncertainty tied to the trade policies go away next year. That may be a longer workout, maybe a multi-year workout. So unfortunately, it does mean that business investment in Canada could have that cloud hanging over its head for quite some time.
Okay, we're going to have to leave it there, Saba. Thank you very much for joining us. All the best for the holidays.
You too.
Sal Guattieri is Senior Economist and Director for BMO Capital Markets. Well, Canada can claim a lot of great thinkers in paving the way for the future, including the foundations of AI. We were joined earlier by Mark Daly, co-chair of the Council of Ontario University's Working Group on AI and a professor of computer science at Western University.
Canada is already a world leader. We punch above our weight in AI. We are the home of some of the scientists who created the deep learning revolution through which we're now living. And there's an opportunity for us to lean further into that and develop capacity right here in the engineering space.
So we have Cohere, a major player, and you say it's been successful. But you say we lack what you call a truly public option, a foundation model built by and for Canadians. What is that in AI terms, a foundation model?
So foundation models are the big models that are typically generalists. Like when you log into ChatGPT or Google's Gemini, you can sort of ask it any question and it can come up with an answer. And those foundation models require huge scale engineering, not quite like the Apollo project, but think on that order. And it's not something you can do one university alone or one small entity alone, but working together, you could create a training environment where you learn how to build these foundation models, and then that becomes part of the sovereign AI skill set of Canadians.
So I think your argument is we don't necessarily need to build a huge one in Canada along the lines of OpenAI or Google's Gemini, but we do need to develop the skills here.
Exactly right. This isn't about competing directly with OpenAI. That's not something for the public sector to do. What we're interested in is creating the capacity for a new generation of Canadian startups to have young, smart people who have those sort of intangible skills that you only get by building these things.
But But ultimately, the technology will need the giant engines, won't it? And they'd be in the hands of Google or ChatGPT.
I think there's another path. And if you look at what came out of the G7 digital ministers meeting, you can see Canada making agreements, building partnerships where there's a world in which like-minded nations co-create the infrastructure so that we can each run sovereign AI systems. Mm-hmm. And I think Canada is really well positioned to walk that path.
Switzerland has launched a project along these lines. Germany has, and Singapore.
That's right. So this isn't something radical that I'm proposing. There are good models we can build on, like-minded nations we can partner with to co-develop this, and it's within the realm of the possible for us.
I mean, the question here is how much are we going to be subject to U.S. tech dominance? And it is a question of sovereignty.
I think when you hear our Prime Minister and our AI Minister talk about AI sovereignty, this is exactly what they mean. They don't mean that Canada has to build everything alone in a shell. It means that we need to have the capacity to decide intelligently what we're going to buy from whom and what we need to build ourselves.
So what change in government policy do we need to see right now?
I think we're moving in exactly the right direction. This interest in building clubs of like-minded nations to create together, to share expertise, and to grow systems that we can share with each other.
Mark, I have to ask you, as a computer expert, how exciting have the past few years been with the rise of these large language models?
So neural computation is what I study. And where we're at right now is somewhere that 5 years ago, I desperately hoped we'd get here before I died. I wasn't even optimistic before I retired. And here we are now. To me, as an expert in the field, it feels like we're 2 decades ahead of schedule. So I wake up every morning and think, wow.
I got to admit, I'm a bit like that when I ask an AI engine a question. I'm pretty stunned. What will be the next thing? I mean, what about hazards? Are you worried about uncontrolled growth of AI or the thing even becoming in some way self-aware? I know we're getting into philosophy there.
Yeah, so I'm less worried than some of my colleagues, but I absolutely acknowledge their concerns. But I think this is something that we can manage as humans. We have to have these discussions. The UN is in the process of appointing a new expert advisory panel. It's tough because these discussions have to happen at the international level, and there's no international enforcement mechanism. So all of the world's nations have to be incentivized to work together. But we've done this before, we can do this again, and we're taking it seriously in the way that it deserves. So I am optimistic, but that doesn't mean that I sort of want to say, okay, everything's going to be fine. It is important for us to continue to advocate for our governments to take this seriously.
And Andy was speaking with Mark Daly, the co-chair of the Council of Ontario Universities. Coming up, an online Arabic literacy program that's using AI to gamify how you learn. More on that after the break. Duolingo, Coursera, Google Classroom. There's been a high demand for these online educational technologies or ed tech tools. They make it easy for students, or easier, I should say, for students and adults to learn new skills on the go. And it's an industry projected to be worth about $281 billion in 2026. Here to share more on her ed tech tools is Diana Al-Dajani, founder and CEO of EduTechnos. And Diana, thank you very much for joining us.
Thank you for having me.
Let's talk a little bit about what your program is and what it does.
So EduTechnos, we use AI and gamification to make Arabic language learning easier, fun, and fast to learn. And what we ended up doing is we're having now, other than the tutoring operation, we also have an app called Luga, from Lugha, which means a language, where it is easier for adults to learn Arabic on the go. We also have, we are launching also Alim, which is basically a platform that is powered by AI for teachers. And it is to solve the differentiating instructions tools. Basically, all what the teacher needs to do is click on the classroom, all the suggested lesson plan structure, activities, and homework will be there based on the student's performance and based on their weaknesses and strengths. And we have a suite of products, but these are the main highlights that we do right now.
Now, how are you, I just mentioned quickly before we came on air, it's almost the golden age for language learning, isn't it? And what kind of an impact has AI had on this, or is having on language learning?
So it is the golden age, and Arabic is the top 5 fastest languages in growth, and it's top high on demand as well. And when we talk about AI is, or at least the way that we use it in EdTech, is to accelerate the coding, to accelerate the response, accelerate the analysis so that you don't have that lag time until you get the data, analyze it, and then see, oh, this is the recommendation. Now, all of that AI can help with, and this is what we're doing with Alim. We take all of this, and this way we can hyper-personalize the learning experience, not just for languages, because with our platform, it is built to be subject agnostic, so it doesn't really matter. So this is where AI is amazing, because in education, there's no one size fits all. And this is where AI helps us to personalize as much as we can. Like teachers go above and beyond with differentiating instructions and figuring out what each student needs. AI will help and accelerate that.
Does the AI almost learn as it works with the person?
Absolutely.
Like each individual person doesn't necessarily always need the teacher's guidance, but
absolutely.
Just
so
there
are different steps. The first steps, what we do is you need to get the recommendations and everything, and then after you validate the data and the output from the AI, because you need to increase the accuracy percentage of the AI results as well, then the AI will start predicting, oh, this is the profile of the students. Let's focus on this, be careful with that. We're actually working on a very interesting project right now that is even outside the subject itself, and it's about how to deal with different behavioral challenges in classroom. The students did 1, 2, 3, then the AI, because we do this with consultants and everything manual. Yeah. And we're like, you know what, we can do this with AI right now. So this is what we're doing, like to help with the suggestion how to deal with this difficult behavior.
And now the other side is the gamification. What exactly, is that literally turning things into games, and does it work for adults?
No, gamification is actually using game elements, what make a game, using that, and you have an objective, and usually it is an educational objective. If we're in the context of education, it can be also in the context of business, it can be in any context you want. But in the context of education, you have this objective. Then to achieve this objective, there is a certain behavior that needs to be done. So how are we going to get the students, which our audience, and the audience can be different based on the industry, how are we going to get the audience, the students, and how can we motivate them using these game elements to actually do that task, that behavior that otherwise they would find difficult, boring, or not preferred, so that we get to the objective. And actually, this is what we're doing also with Toronto Public Library right now. We're providing workshops about gamification, but for business and startups, focusing on newcomers as well, because the gamification itself can be applied to anything. And this is our competitive advantage. It's not just the AI. We're expert in gamification. We know how to get the pieces together, you know.
How would you apply that to a startup or a company? How would gamification work?
So when you talk about startup, for example, there are two main things that they need to think about. The first thing is how to validate, and then how to scale. And this is in full alignment with the game thinking. How do I get them to play, and how can I keep them playing? And the key element is them, which is the audience. So they need to understand the audience. What makes a student tick and motivated is different than what teenagers or adults wants to go to a restaurant. So you have to figure out, you have to understand your audience, and then you put together a gamification mix, which is a part of game elements. Some of the game elements may be collecting points, having level, progression, leaderboard, or put it within an experiences. Some of the gamification experiences can be winning, triumphing, chilling out.
Can that apply though across all different industries?
Yeah.
I mean, if you work in the mining industry, can this fit in with that?
Yes, easy, because it's all about understanding what is the objective, what is the audience, what makes them tick, and then how can we influence this behavior that we want them to do, even though it's unwanted, whether boring, whatever, so that to reach this objective, I worked with people in fashion, I worked with people in restaurants as well, and some of them, I'm trying to remember, in health industry as well. So I've been working and coaching a lot of these startups on how to validate and how to use gamification in their business.
Okay. We have to wrap it up there, but Diana, thank you very much for joining us.
Thank you for having
Hopefully
me.
you have a wonderful break over the holidays, but thank you.
Thank you so much.
That was Diana Al-Dajani, founder and CEO of Edutechnos. When we come back, we'll bring you today's top headline and update you on the markets. We'll also bring you the latest on Canada's new ambassador to the U.S. Canada's monthly GDP fell 0.3% in October, according to Stats Canada. The manufacturing sector fell 1.5%, mostly due to a drop in machinery production. Wood product manufacturing reported its largest decline since April 2020, reflecting the impact of U.S. tariffs on Canadian lumber. Service disruptions due to strikes reduced activity in the public sector, alcohol retailers, and transportation and warehousing. Shares of ServiceNow are falling slightly. They're down about 2.5% right now. The software company will buy cybersecurity startup Armis in a deal valued at $7.75 billion US. ServiceNow expects to fund the transaction through a combination of cash on hand and debt. The deal is expected to close in the second half of 2026. Founded by veterans of Israeli military cyber intelligence, Armis specializes in identifying and tracking security threats. The U.S. GDP rose at an annualized rate of 4.3% in the third quarter, the fastest pace in 2 years. The delayed report shows an economy bolstered by resilient consumer and business spending. Most punitive tariffs were also rolled back. This follows a 3.8% growth in the prior period that was bolstered by households. The record-long government shutdown, though, is expected to impact fourth quarter growth. And looking at the markets right now, you can see the TSX has dipped down below 32,000. Closed at that record high yesterday, above 32. Right now it's off slightly. It's been a bit of up and down as we try and figure some things out right now as we head into the end of the year. Strong commodity prices driven by that gold. We're driving the market up. For now, though, it's about a wash right now. And south of the border, you can see everybody is on the green side right now. The S&P 500 up by nearly a quarter. Dow Jones Industrial Average 0.15%. And the NASDAQ also up by about a quarter. Nearly a year into Donald Trump's trade war, and Canada has just announced a new ambassador to the United States. Mark Wiseman will replace Kirsten Hillman in February. The change comes at a crucial time as Canada gets set to renegotiate the trade agreement with the U.S. and Mexico. CUSMA has so far shielded the Canadian economy from the worst of the effects of tariffs, but things could soon shift dramatically. CTV's Jeremy Sharon reports.
He is a global investment banker, pension fund manager, and friend of Prime Minister Mark Carney. Now, Mark Wiseman will be Canada's next ambassador to the U.S.
There is going to be an enormous amount of hurdles and landmines that the ambassador is going to have to walk through.
He steps into what is widely viewed as Canada's top foreign post without any diplomatic experience, but the Prime Minister's office points to his extensive experience at American financial institutions and knowledge of capital markets on both sides of the border.
He brings that outside of politics, real-world experience that I think will be of benefit to the country for sure.
In a social media post announcing the appointment, the Prime Minister says, as a core member of our negotiating team, I know he will advance the interests of Canadian workers, businesses, and institutions.
Carney is betting that Wiseman's finance credentials will command the attention and the respect of Trump.
A bet that couldn't come with higher stakes for the trade relationship between the two countries.
And there's a lot of anxiety over sectoral tariffs and then the CUSMA review. So really important here in this case that the Prime Minister has recruited someone who's a globally recognized deal maker.
In 2025, the current CUSMA deal helps shield Canada from the worst impacts of tariffs. But with its review set to begin in the new year, there are no guarantees.
The president can and quite possibly will walk away from this agreement. And if he does, then I think all bets are off.
Sources tell CTV News Wiseman won't be alone at the negotiating table. The Prime Minister, along with Dominic LeBlanc, the minister in charge of Canada-U.S. relations, will also play critical roles. Jeremy Sharon, CTV News, Ottawa.
Well, Canada's sovereignty has faced pressure during U.S. President Trump's second term, leading Prime Minister Mark Carney to prioritize military investment. CTV's Judy Trin with an update on that.
Canada's new government will rebuild, reinvest, and rearm the Canadian Armed Forces.
The Prime Minister's clarion call to defend against a superpower's imperialism.
What I'd like to see, Canada become our 51st state. We give them protection, military protection.
Donald Trump turned his threats into a trade war, pushing Mark Carney to turn the military into an economic shield.
I'm announcing today that Canada will achieve NATO's 2% of GDP target this year, half a decade ahead of schedule.
Carney's first budget invests nearly $82 billion in defense over the next 5 years. There's more money for recruiting, training, and equipment. Soldiers are getting raises and bonuses for serving overseas and deploying in the far north.
The priority is the defense of Canada and the Arctic. So we are investing both in terms of capabilities, but also in terms of planning and programming.
Climate change has made Canada's Arctic and its natural resources vulnerable to foreign intrusion by Russia and China. Better weapons are needed to patrol from the land, sea, and air. In the past, 75% of procurement dollars went to American companies. That's being reduced.
We're not going to be spending 75 cents of our dollar south. We'll be amortizing that money out in Canada where we can, and then spending it in other places where we have to.
The Defense Investment Agency, created in October, aims to ensure that Canadian companies benefit from big procurements, like the plan to replace a fleet of aging submarines. The Navy wants 12 conventional subs.
The reason we need submarines is very simple. It's the only technology in the Navy that guarantees that we control our waters.
There are two competing bids. The Prime Minister visited TKMS, the German-Norwegian conglomerate, in the summer. Then in the fall, Carney visited the South Korean rival, submerging himself in Hanwha's proposal.
I'll be back in 60 days.
The contract, which includes manufacturing and maintenance, could be worth more than $100 billion. The winning bidder is expected to share the rewards.
Buying Canadian, both in terms of steel and aluminum. So that's not a surprise. I think for both submarine manufacturers, they would be looking at that. Obviously, the question of servicing these vessels over time. I mean, Remember, this is a long-term investment. We're talking 30, 40, maybe even 50 years.
While the submarine supplier will be chosen next year, the decision on fighter jets is still up in the air. Canada has already purchased 16 F-35s from the U.S. With Trump's tariffs, whether to buy more is being reviewed.
I don't believe that we've had enough jobs created and industrial benefits done out of the F-35.
Then there's the Swedish charm offensive. The King leading the charge to pitch the Gripen fighter and offering to build the Nordic jet in Canada.
The government's steps to diversify our defense and trading relationships are absolutely crucial, but need to be accelerated.
The military budget will continue to increase over the next decade. The Prime Minister, along with NATO allies, has committed to spending 5% of GDP on defense by 2035. That will equate to roughly $150 billion a year, the cost of defending Canada's sovereignty. Judy Trin, CTV News, Ottawa.
Coming up after the break, we'll bring you the story of another small business that is bringing Peruvian flair to Canada through home decor. That's next. If you're looking to bring Peruvian textiles into your home or share them with your friends and family, our next guest small business is catering to just that through products brought straight from Peru. We're joined now by Heidi St. Hill, co-founder of Llama and Home. Heidi, thank you very much for joining us. So let's talk a little bit about what your company is, and then I want to get into, it's brand new, and I want to talk about what it was like for that. But let's talk a little bit about some of the products and how you came upon this idea.
Yeah, we are a Peruvian-Canadian home decor brand. We want to bring in some of the culture and the warmth and the textiles that are found in Peru and bring them back into Canadian homes.
And you were down there for how long?
I moved there in 2015, so I was there about
Little Peruvian fella?
Yeah, I fell in love with the country, and then I fell in love with a man. So I had my family started there, and we started decorating with a lot of these traditional textiles, which I love. Mm-hmm. And then when we moved here, I just felt there was something missing in a lot of the homes that I was seeing and buying at the stores. It was just too much the same. So we thought maybe there was something there where we wanted to bring something that we love and bring it here as well.
And so what was it like at the start then? Had you ever run a business of exporting or importing?
No, I had not. My husband had done a little bit in his first business, but he's a graphic designer. And he runs his own business, and we have had this kind of idea noodling at the back. And my sister-in-law, she's in fashion and design, and she's still based in Peru. So between the three of us, we kind of realized that maybe there could be something here beyond just an idea. So we started to plan, and about a month ago, we had everything here, and full steam ahead, we dove right in.
But what's it been like having to deal, for the first time, you're essentially dealing for the first time ever, red tape on two countries?
Yeah.
What were some of the quick lessons you learned, the early lessons?
Well, after buying all the textiles and everything like that, trying to transport all of our pillows, all of our textiles, get it back here, it was a really tricky thing because in Cusco and in that area, it's not an easy way to get it then to Lima and then either on an air freight or a boat here. So there was a lot of red tape, a lot of different companies that we had to talk with, and deals fell through and we weren't sure we were going to make it. So that took about a month and a half to kind of figure out and get everything here.
Has it, like everybody's turning to AI, has AI helped with you, help that? Kind of straighten it, or at least give you a little clarity on things?
A little bit. I would say it's really because of Peru, you have to know people and you have to know who to contact. So it came down to having a lot of contacts in the area, people that we know or that know someone in transportation, in importation. All of those people kind of helped along the way, but it was a learning process. There there were mistakes, and we're figuring things out. But
what were some of the mistakes you made on that side?
we had a company that we thought we were going to get all of our products from Cusco to Lima and then to Toronto and directly to us. And then as we're loading the boxes on, everything falls through. And because we didn't know if we could trust that company, it all came down to, is it official? And who are we? Who are we kind of getting into business with? So we had to go back to the drawing board, and it was a little bit of a scary time, but.
Did you end up using that company, or did
No, we ended up through another friend, kind of connecting with an auxiliary of FedEx, and they helped. They were really, really great and really helped us. It was still confusing, but they helped us get to the finish line.
And then what about from this side? Then when you're trying to bring it into Canada, what was it like trying to deal with
that part was easy. That part was really easy. Yeah, we had to pay customs, but that was a really simple process. FedEx got all of our products directly to our door, and then at the end of November, we were ready to roll.
And so now next up is marketing. How have you done that, or how are you doing that? How are you selling these beautiful products?
Well, so my husband, as I said, is in graphic design, so he has a lot of marketing knowledge. So we started before everything. We started in September, kind of letting people know, family and friends, we were going to launch. We are going to do this. We're going all in. And we have been slowly building a little bit of a following in London, Ontario. That's where we're based. And from there, once we had our products, we were in markets. We have been doing as much social media content as we can, word of mouth, and the response has been amazing.
Are there particular audiences you're targeting, or is it just a...
Well, that was one area. We weren't sure who was going to love it. You know, was it going to be parents who wanted it for their little girls' rooms, or adults who want, a little bit of color back in their living rooms and their bedrooms? And it has been men and women across the board. Kids, everybody's just coming up. They want to touch. It's a very tactile experience with the textiles.
Tactile.
Yeah, and we've been pretty amazed at how much everybody loves the idea of a really authentic handmade product with a lot of color and a lot of history coming back to their homes.
Well, I guess it's important too because you have a personal connection to it, because you know where these are coming from.
Yeah, we know some of the families.
You know the families who are doing that. How much is that as a selling line? How big is that? How important is that?
Well, I think when you really see the people who are putting their heart, their soul, the history that this comes from, the artistry, these are families who have been doing this for generations, and they pass that knowledge down, and they just do this, like for one of those textiles, it takes sometimes 3 weeks. So that is a lot of work, a lot of art. So we definitely try to value that. We want, their families to succeed and grow, and we want to spread the knowledge that, comes with it, and just share the product. Get it not just in and around the Andes, but out in the world, so people can enjoy a bit of color and texture.
And what are some of the before we go, what are some of the materials? You called llama. Are there is there llama hair in there?
No, there's not llama hair in these. These are 100% sheep's wool, and one of them is alpaca, which is an extra soft material. But these ones are all on the front, the sheep's wool, all natural dyes from plants, minerals. And then on the back, we have different materials to make it nice and soft for a nap.
Okay, and where do you hope to go with this? What's next?
So we are hoping to grow our e-commerce. We want to grow our following. We want to become a local brand here. We would like to partner with retailers in the area, and then we want to have our own brick and mortar and hopefully chain one day.
All right, I have to wrap it up there, but thank you very much for joining us.
Thank you so much.
Wonderful holidays.
Thank you too.
That was Heidi St. Hill, co-founder of Llama & Home. Coming up next, we'll tell you about the shifting fortunes of the Christmas tree industry as exports to the U.S. drop compared to last year. Christmas trees mean a lot of green in Nova Scotia. They're worth more than $50 million a year there. But as imports dip, local tree sellers are struggling. CTV's Paul Hollingsworth has more.
Christmas trees represent big business, generating more than $50 million each year in Nova Scotia.
Last year we sold about 75, and this year we did about 350.
Most tree lots around the province are sold out, a signal this season has been productive for sellers.
Somewhere's up to 10%, some more. So it's really encouraging to see.
While local business has climbed, U.S. exports have dipped compared to 2024.
Unfortunately, our shipping market is down about 40%.
The trade tensions between Canada and the U.S. have resulted in a major blow to some businesses' bottom lines, with regular buyers backing off because of tariff fears.
There wasn't a tariff on Christmas trees. It was just the uncertainty and the nervousness within the market. We've taken some pretty big hits this year for sure.
Pushing away any bad news, Colin Hughes is focused on the upside. His local buyers are still choosing his real trees in large numbers instead of artificial options.
Well, there's only one way to get the smell of Christmas or the scent of Christmas, and that's with a real tree.
Selling those trees in large numbers is a top priority. After losing business in the U.S., Colin Hughes has a backup plan. He hopes to expand his business and sell trees in parts of Europe and Asia. Paul Hollingsworth, CTV News, Halifax.
Market Call is coming up next. Today on the show, we have Jason Del Vicario. He is a portfolio manager at Hillside Wealth Management, IA Private Wealth. He'll be taking your questions on North American and global stocks. Well, that's it for Morning Markets for today. Thank you for watching. We'll see you back here tomorrow.